What if I told you you could predict the future? Hey traders, Akil Stokes here, currency analyst and head trading coach over at TradingPower.com, and welcome to another Forex market preview video. I have two very important questions to start off this week of trading. First, who you got in the Super Bowl today? There's a poll question in the top left or right somewhere. Let me know if you're going with the Pats or the Falcons. Very important. I'm taking the Falcons, or I'm rooting for the Falcons, I should say. But more importantly, have you signed up for our Ultimate Trader Transformation 3-day workshop? If you have, do me a favor, hit that like button underneath this video. And if you have not, look in the description box underneath this video. There should be a link to our free 3-day trading workshop. Make sure you sign up. As soon as you enter your email or whatnot, you should be sent kind of a, hey, you've registered email. If you don't get that within a few minutes, make sure you check your spam folder. If that still doesn't happen, just shoot us an email over at fxsupport@tradingpower.com. We can go ahead and get you the information needed. It's going to be a big event, and unfortunately, if you're watching this late after the event, well, that's exactly why you need to be on our email list. Go over to tradingpower.com, click that Learn to Trade tab. There should be a little deal that pops up where you can enter your email. Make sure we have your information. That way you don't miss the next big event. Now, back to today's topic, predicting the markets. Many of you are going to think that is clickbait, which means I'm saying it just so you can watch this video and I'm going to talk about something else. Well, that's not true. Indeed, we can predict the markets. However, it's important to understand that just because we can make predictions in the market doesn't mean those predictions are going to come true. And that's where a lot of traders get into trouble. A lot of traders think they can predict what must happen, what will happen, what the market is going to do. And I'm sorry, that is impossible. Yes, we can make predictions, but our predictions are only going to tell us what we think is likely to happen. So it doesn't mean that, as soon as we make a prediction, we go all in. No, we make a prediction about a certain area, and then we analyze the area and create rules of engagement for how to attack the potential, keyword potential, trading opportunity that may arise. And we're going to head over to the charts, and I'll walk you through an example of exactly how we do this. So what you see in front of you is the Aussie Canada on the daily chart. And if you've been a follower of our Forex market preview video here, you'll remember this is a pair we talked about a few weeks ago looking for a structure-based opportunity. And of course, if you guys are in the syndicate, you remember this is a trade that we actually executed and ended up doing really good on. As you can see, the market went down for 1, 2, 3, 4, 5 straight days in our favor. And now we've kind of retraced off that level due to, we had some very big news for Aussie as far as trade balance go. We've retraced into a level of really a neutral zone. And what I want to take you through is the process that we go through to really start our trading day. And it's called the IPDE process: identify, predict, decide, execute. And I guess before I get into that, I want to address a comment I got on a video I did. Many of you know that on my other YouTube page, my personal YouTube page, and right underneath here on the Trading Power YouTube page, I've been doing something called the Trading Blog, where it's not really technical analysis, but it's kind of just, a time to reflect on the day that was, maybe talk about a question that we got in the live room or somewhere on social media. Nice, short, kind of quick hit video that is trading related, but not chart specific like you see in these Forex market preview videos. And the last trading blog I did was called Fundamentals plus Technicals, or Technicals plus Fundamentals, where we had a conversation in the live room. It was Jobs Friday, so we had the non-farms and all that fun stuff come out. And we had a good conversation about the market, the number, and how the market reacts to the number, and really just how to combine the two into some very good trading opportunities. And I got a response, which I should have expected, I guess, saying, hey, Akil, fundamentals rule all and technicals are dumb and blah, blah, blah. How can you ever do anything from technicals? And I'm not going to get into the conversation about which is better, fundamentals or technicals. You're never going to win on that. The fundamental traders are going to have a very strong bias in their direction. As a technical trader, I'm going to have a very strong bias in my direction. At the end of the day, it doesn't matter. As long as you can be consistently profitable with what you're doing, then you're making money, and that's the goal, right? But I do kind of take offense or want to explain, why you just can't say that one is wrong or the other is wrong, especially saying you can't tell anything about the market because of technicals. Technicals represent the market. The candlesticks in front of you are nothing more than a visual representation of all of the market's participants. It's a visual representation of what price has done and what price is doing. That is the information we want to have. And I think the trader was going to the question, well, if you have a number coming out, the technicals won't tell you which direction the market's going to move in. And that's true, right? If we have a big news release coming out, and I'm looking at a chart right now, I don't know whether it's going to go up and down, but guess what? Or up or down. But guess what? Either do you. If you pay attention to a lot of the fundamentals, it's not really about the number. It's about the market's reaction to the number. If the market expects a good number and maybe gets a good number, you may see this certain reaction, or maybe that number is already priced in. Maybe a bad number causes good movement because it isn't as bad as what the market expected. There's so many moving pieces that, you still don't have all the information. At the end of the day, whatever side you're on, it's all about making predictions. And as far as technical analysis goes, one of the reasons I love it is because the market has shown me which levels, which price points have been important in the past. And that, it doesn't mean those price points will be important in the future, but it leaves some pretty darn good clues. And when I look at this chart, that's what we're going to talk about today. Right now, price is in what I would call a neutral zone. You can see that we're kind of in no man's land. We're not at a place right now where I would want to buy. We're not at a place right now where I would want to sell. This is a place where I wait and I try to predict where price action is going to go in the future. And I want to walk you guys through this. This is something we do each and every day when we start our live room up. I ask the traders, okay, where do you think price action is likely to go next, right? We've identified price action is in a neutral zone. Next is the prediction. Where do you think price action is likely to go next? So take a few seconds and jot it down. Let me know, play this game. I know we're not live, but see if what you're thinking lines up with what I'm thinking, and I'll give you a clue. No, just go ahead and predict, and I'll show you what I think. All right, enough time. So here's what I would do as far as my prediction goes. Where is Akil? Where is price action likely to go next? Well, I would look at two levels. I would look at one, previous structure resistance right down here. You can see we also previous structure support right down here. You can see we come into a previous level of inside support as well. Or let's go ahead and make this green for support. Oh, that's not green, Akil. Man, you're off today. Or the market is likely to come into previous structure resistance up here at this soon to be red line. Right? And just go ahead and delete this other one I drew on. Right? So if you said either of these levels, you are correct. And why? Because structure acts like a magnet. Support and resistance acts like a magnet. Price action is pulled towards it, right? So right now, I don't know which one's going to be hit, right? We have to be honest. If you're someone that says the resistance level has to be hit or the support level must be hit, you're just lying to yourself because we don't know. But what we do know is that price action is likely to gravitate to one of these levels. Why? Because this was a previous level of structure right up here. Also a previous level of structure here and here and here and here, right? And, or if price action goes lower, we have a previous level of structure here, previous level of structure here, here, all this consolidation in here, and even a little area right in here where price action went from support, broke below to resistance, came back below, found resistance again, broke above, came back to support. And that's all of the knowledge I need as a technical trader. All I need to know is where is price action likely to go next. And once I can make predictions on where price action is likely to go next, then I can go through my trading plan. I can look for my rule book, and I can ask myself, how can I go about trading it? So What I would look here for in Aussie Canada next week is a move to one level or the other. So let's go down to the 4-hour chart. And this is where we use our if-then thought process. So if price action goes lower, then I look for a trading opportunity down here and a chance to get long. Now, that doesn't mean I put an aggressive buy limit down there. Doesn't mean I just say, oh, price action has to respect this level and bounce off. Because no, that's not true at all. We can, of course, continue down. But once price action enters this zone, this is when I start looking for rules of engagement. So I guess you could be as aggressive as saying just put a limit order there. I'm personally not. So I want to look for some proof that, proof. Man, get my voice back, Akil. There we go. I want to look for some proof. There we go. I want to look for some proof that the market is going to hold that level. Some proof that the market is likely to fail to break support, and we may see some type of retracement. And if you're looking strategy-wise, if I just bring one more arrow over here, what do you have? Right? Does this look familiar, anyone? Joop. Market comes down, we double bottom, right? Two bottoms, we come back up. Maybe we retrace to the 2618. Retrace to the 618. Kind of ruined it right there. But maybe you have a 2618 opportunity down here, right? Where market comes to that 618 and you buy it up. Maybe you have a kiss of death opportunity where the market retraces these lows, right? And you buy it up. Maybe you look at it as just simply a structure trade. The point is it doesn't matter, but you go to your rule book and you flip through your plan. Hey, what have I worked on? What have I back tested? What am I allowed to trade that will allow me to take advantage of this opportunity? You can say the exact opposite for if price action comes up there, right? If price action continues higher, maybe you look for a double top up here, right? Maybe this is your counter trend trade and your opportunity to look to get short in anticipation of a move down. And you know what? If you're fancy, maybe you do both. Maybe you look for that 2618 opportunity, right? Market to come down here. You look for an extension up. Maybe you look to ride this extension up in anticipation of this higher level of resistance being hit. This part is not really important right now for many of you watching this. I'm expecting that many of you watching this YouTube video are newer traders or are kind of just getting into trading. What you want to focus on most is not how can I trade, how can I make money, but your skill of reading a price chart, your skill of making these type of predictions. Because I'll tell you what, here's a secret. If you can't make a prediction, right? If you haven't mastered the part of making predictions in the market and you can't do that fairly accurately, it doesn't matter what your trade strategy is because you're not going to be able to find good opportunities in the market. So that's how I would go about predicting Aussie Canada. I know some of you are saying this already, some of you that are maybe advanced. Akil, is there something else here? All right, you answered the question earlier and I didn't say what you maybe expected me to say. But yes, there is a third level of structure that could be hit, and that's going to be these structure highs up here. And that's if we were to fail or if we were to break and close above our structure level right here. And if you look at this formation, right, this is going to be called a head and shoulders, right? Where you have the market creating a left shoulder. We come down, we create a head. We come down and create a right shoulder, right? This level right here is called our neckline. And what you can do is also predict this. You can predict that price action will come to here. This is typically a reversal pattern. So you'd expect that price action would come to here, break your previous level of resistance, and make its way towards your higher level of structure, typically putting in a 1-to-1 measured move. So if I take this and I just copy and clone, shoop, look at that. It'll put you right up there at previous structure. Looks like a 1618 Fibby as well. Let's bring that Fib extension in. Swing low to swing high and back up, not quite. Yeah, you got a 1618 up there. The 1-to-1 measured move is not going to quite line up with it, but you got a 1-to-1 measured move up there as well. So you can also look to trade this as a head and shoulders pattern for you guys that are more advanced. And of course, I look at the head and shoulders pattern as there's a few ways to trade it. You can just trade the breakout aggressively, meaning that you look for a breakout of this level. You look to get long using a buy stop order, look to get long as the market's getting long. Or you can look to trade it more like a trend continuation opportunity where you wait for the breakout, wait for the retest, and then try to get involved like that. But again, none of that is important if you can't make predictions in the market, and that all comes from reading a price chart. So if you find yourself struggling to read a price chart, if you find yourself struggling to know what the trend is, make sure you're attending this workshop in a few days. That's what we're going to talk about on day 1. So do something. Don't just tell yourself, hey, I'm struggling here. Oh, well, I guess it's okay. No, do something about it, right? Do something about it. That's what losing traders are doing. They're sitting back struggling, and instead of trying to do something about it, they're looking for shortcuts, right? Invest the time, right? Put yourself in a place where you're going to get educated and do something about it. Work on it and change it. Change your future. That's how you get better in trading. All right, gang. So I hope you guys enjoyed this week's video. Again, make sure you sign up for our Ultimate Trader Transformation 3-day workshop. That's going to go on next Tuesday through Thursday. That means 12 weekers. No live Q&A tomorrow. I'm going to be traveling first thing in the morning. Should be fun. And members of my New York Live trading room, no live room all week. Why? Well, because we'll be doing the workshop during those hours. And again, make sure you be there. Make sure you sign up. It's going to be a lot of fun. Bring your notebook. There's going to be a lot of information. And it's going to be great. We haven't done this one this big in a few years, so I'm pretty excited about it. So until then, plan your trade, trade your plan, and good luck in the markets this week.